Ladies and gentlemen, welcome back. This is Christopher Aaron. It is January 27th, 2021, and we are going to have a gold and silver price update. There was a Federal Reserve meeting today. We will talk about that as well coming up. And I want to let you know that for a very limited time, in fact, for the next 3 days only, the special trial of our premium service is available to you. 2 entire weeks of this service. You can watch and download every report, every video that we have ever published, all for $1. This is an extremely important time in the markets when you see what is happening here. The absolute insanity that we are seeing in other parts of the markets. I'm going to bring that up to you in just a moment after the Fed meeting coverage. You will see why I am doing this. Now, the truth is that I think there is the possibility to radically alter the course of your life if you get this next move in the precious metals markets correct. I think there is the strong possibility for that. This is not guaranteed. Nothing is guaranteed in the investment world, except for the fact that all fiat currencies in the history of mankind have gone to zero, right? We know that. What else? Gold and silver will never be worth zero. And the stock market looks quite speculative at this point. Those are about the only things I'd be willing to say with any sort of assurance. And for that reason, we are opening up this trial so you can take a look. No gimmicks, no games. If you like it, you stay on at the full membership rate after the $2 2-week $1 trial. If you don't want to stay on, just cancel before the trial is up. That's it. So let's get into it. Either way, make sure you hit the big red subscribe button and the bell icon so that you will stay up to date on when these videos are coming out. Because how else will you know when the videos are coming out if you don't hit the subscribe button? So do it, and let's go. We're talking about Jerome Powell, the head of the most powerful central bank in the entire world. I watched the entire meeting today, the entire press conference, and I want to give you the executive iGold Fed meeting synopsis. And that is as follows. There is no change to the policy. We are going to keep printing as much money as is necessary to keep the economy afloat. That was Jerome Powell's basic meeting. You could have taken an hour and a half to watch the whole thing, including the conference, including the questions after the press conference and everything like that. But there is the executive summary, and I'm not joking about this. I know I make fun of this kind of stuff sometimes, guys, but I'm really being serious here. There's no change to the policy. Interest rates are being held at artificially low levels at 0 to 0.25%, and there's no indication that interest rates will change at all over the course of the next 3 years. So that's where we are. So no change. Let's see how the precious metals responded. So apparently the gold market, anyway, thought that there would be even more printing of money, even more suppression of rates than Jerome Powell stated. When you see a central bank come out and just state flat on TV, we're talking, right on CNBC, right on Bloomberg, public cable TV, when you see them say that we are going to print as much money as is necessary, yet gold sells off on that, it's telling you that gold has already priced that in. So it's interesting. So it's going to take something else to get the gold market moving. Yes, there could be manipulation in here, and in fact, it looks like there was an attempt to do that today, right at the start of the New York Open, but then notice buyers step right back in. The Fed meeting, by the way, was not till 2 o'clock. So that is, where is that? 12:04. 2 o'clock is right here. See this little white line where my mouse is? And so notice right after the Fed meeting, gold sold off a little bit further. So this early morning buying was not based on the Fed announcement. That was right here. Let's switch over and look at silver. Same kind of thing. They tried to shove the silver price lower in the morning. This is one of those moves that looks like it was more manipulative in my mind. And so for the record, of course I believe there's manipulation in the precious metals markets. It's just that I don't think that the manipulation is stronger than the market itself over the long run. If I did think that, I would not be involved in these markets. And if you do think that, you shouldn't be involved either. You should move on to a market that you don't think is so heavily manipulated as to cause it to never be worth the proper value. I don't believe that, which is why I'm here. So we saw the buyers step in. That was nice. But then on the Fed announcement that they're going to print as much money as they need to for the next couple of years, it's kind of a snooze fest here for silver, right? And gold, both. And so let's see how the rest of the world's markets responded. Now remember, 2 p.m. was when the Fed announcement came out. Right here where my mouse is, 2 p.m. We look from the start of the day, and what can we see? It was really a deflationary kind of day. The U.S. dollar and U.S. bonds were higher. Oil was pretty flat, but pretty much everything else sold off. Commodities sold off. Gold sold off. Silver sold off. The stock market sold off. And what do you know? When stocks sell off and gold and silver sell off, the gold and silver miners tend to leverage those losses on the downside, and that's what they did today. So kind of a lackluster day, but we got to take our punches sometimes in these markets, right? If we think there are life-changing gains to come in the future, you're not going to get that type of possibility without taking your punches from time to time. So let's talk about this. Let's talk about this type of price action. What were the miners really doing today in this sell-off? I want to show you the price of gold here on the bottom. We're using the GLD fund, which is a one-to-one proxy for the price of gold. And we're looking at the GDX large cap miners, gold miners on the top, same time period, beginning of January through the present. And just notice here, as gold has been moving sideways, notice how the gold miners have continued to drag lower. So what's going on here? Why are the gold miners so weak as gold is... I'll tell you what, guys, remember, we've been talking about this for the last few weeks. Gold is consolidating above 1,800 still. Yes, it was weak today, but look, it's been moving sideways here for the last 3 weeks. Above 1,800. Remember, we were talking about 1,800 being that critical long-term support zone. If you don't know what I'm talking about, subscribe to the $1 trial so you'll see the long-term view that we show. But this is a very healthy consolidation for gold. So why are the miners so weak? Here's where I think I have an answer to this that many people are not talking about. In fact, most people, I don't believe, are considering this at this moment, but we should be discussing this. What we have to do is expand our horizon a little bit from, just looking at gold and silver to considering what is the spectrum here in precious metals as per speculative appetite. What am I talking about? Speculative appetite within the precious metals sector. Let's talk about it as a spectrum. Okay? We're going to talk about within the precious metals sector, what are the choices for investing that give you the least risk, but also with that, the least amount of reward. What are those choices, right? Because you can't have reward without risk. So you're either getting least risk and least reward, or you're getting the most risk and the most reward. And there's a spectrum, right? It's not to say that one is better than the other. It's a question of what is your appetite for risk? Do you have a small amount of money and you're trying to double, triple, quadruple that money? Or maybe are you just trying to preserve your purchasing power and you just want to see something that'll more or less hold its value, not go up too much, but also not go down too much, right? It depends on where you fall on this spectrum. So let's talk about the spectrum as it relates to the precious metals sector. And we're talking about the least risk, but also the least reward on this spectrum is going to be physical gold. right? Gold bars, gold coins, gold rounds, gold stored in a vault, whether you're using Bullion Vault or the Sprott ETFs or Bullion Star, or you have a gold IRA that's sitting in physical gold. We're talking physical gold, the least amount of risk, but also, let's be honest, the least amount of reward compared to what? Physical silver. We just saw it in the last slide. Physical silver tends to move 2 to 1, if not 3 to 1, compared to physical gold, both on the way up, but also on the way down. So you get more reward, relatively speaking, from physical silver, and also more risk in physical silver versus physical gold. Can we all agree on that so far? Okay. Thank you. Let's move on. Let's move down the food chain, if we will. What has even more risk and more reward are the gold streaming or royalty companies. What am I talking about? These are a subset of the gold mining companies that are streamers. We're talking Royal Gold. We're talking Franco-Nevada, Metalla Resources. What else? Wheaton Precious Metals. Right? And these are the companies that are not actually digging for gold in the ground, but they actually loan money to gold miners and they buy a set amount of their production going forward. And so they have relatively limited risk, but they have a lot of upside, but not as much upside as actual gold miners. When you get into the actual gold mining companies, you have more potential reward than the streamers, but you also have more risk. This is to keep in mind. A lot of people just think these royalty companies are the, be-all, end-all of the sector because they've done well as gold is very volatile. But trust me, if you get a period of time in which gold is moving higher, straight higher for a few years, the actual gold miners are going to vastly outperform the streamers. And so we get into mid-tier gold miners and junior gold miners, right? Just moving down this food chain. And then what do we get into? The senior silver miners, the mid-tier silver miners, and the most reward and the most risk in the entire spectrum of precious metals assets here, as far as unleveraged assets. We're not talking about options or anything like that, or commodities for delivery, CFDs. We're talking about unleveraged actual assets here that you can buy and hold. The most reward and the most risk comes in the junior silver miners. So, if we can all agree on this as a general spectrum here, and yes, we could subdivide the junior miners into, exploration companies and development companies and whatnot. But looking at the 8 major categories here, is this 9 major categories? Can we all agree this is the spectrum from least risk, least reward to most risk and most reward? What I want to do is focus on the 2 extreme ends of this spectrum, physical gold and the junior silver miners. And if we take these 2 extremes, the far least risk, least reward, and the far most risk and most reward, and if we plot these on a chart, that is what we are going to do, and we're going to get a ratio which is going to show us the speculative appetite within the precious metals sector. And so what we have here is a 3-part chart with physical gold on the bottom, the junior silver miners, like we just talked about, in the middle part, and up here on top, the ratio between these 2 things. The junior silver miners to gold ratio. And so what this ratio shows us is that as this ratio is moving higher, like it was in 2016, we were seeing the speculative appetite within the precious metal sector moving strongly higher, right? Not only was gold moving higher and the junior silver miners moving higher, but the ratio between these 2 was moving higher in favor of the most speculative assets. And so this was showing us that people were very willing to start buying not only gold and physical silver, but also the gold mining companies and even more so the silver mining companies. Now, here's the key point. Look at where we are today. Even as gold is almost $500 above its 2016 peak. Gold peaked at $1,375, and it's now almost $500 above that. Notice that the junior silver miners are not above their 2016 peak, even though the price of silver is. And so what are we talking about here? We're talking about that the most speculative spectrum within the precious metal sector is clearly lagging the least speculative asset class. And that we can prove by looking at the ratio and looking where we were in 2016 versus where we are now. The point is, guys, that we are nowhere near a speculative peak in the precious metals sector. There's very little speculative demand, and that actually tells us that we're nowhere near a long-term top. This is critically important. So if we are not seeing the speculative interest in the precious metals sector, whether we're talking about silver compared to gold, or the junior silver miners compared to the senior silver miners, et cetera, where has all the speculative appetite gone in this sector? Aha, here's where it's gone. As one example, we are looking at a year-long chart of what company? GameStop Corporation, ticker GME. And I just want to point out to you, as you look at this chart here, which has moved from $20 a share to $347 a share in the last 2 weeks alone, this is a company that is flirting with bankruptcy and is expected to report net losses until at least 2023. So this is a company that's operating in the red, and yet, over the last 2 weeks alone, this company is up 1,650%. As I said, 2 weeks alone, this is not a typo. You can go type this in to Google and search for it yourself. Why? Why the heck is this company so much higher based on no good fundamental reason? Why? Well, here's why. It's because the speculative appetite of the market at this exact moment of time is flowing into these quasi-bankrupt or near-bankrupt companies. Here's an article that just came out today from the Independent online magazine, and it's talking about how GameStop, this company here, there is a fight ongoing between Reddit users, this is a website called Reddit, and Wall Street. Okay? And so what has literally happened here is you have people piling in, people throwing $1,000 or $2,000 or $5,000 at a time into this company called GameStop, trying to create a short squeeze, trying to get whoever was shorting the stock in here to cover their shorts and just send this thing to the moon over the short run. Now, they've succeeded over the short run. The question is this going to continue? And I would argue with you, anytime you see a chart that looks like this, where it's pretty much moving flat, starting to trend up a little bit, and then just goes absolutely vertical like this, for no good fundamental reason, this is the definition of a bubble. This is people that are buying something. It doesn't matter if it's, a stock or a cryptocurrency or, Beanie Babies back 20 years ago or, fill in the blank. People are buying something or, houses in 2007. Remember the housing mania? People are buying something simply because it's a thing and they think someone else is going to buy it from them higher and higher and higher. This is a company that has no net earnings. It's teetering on bankruptcy, yet people are just piling into this thing. This is the definition of speculative enthusiasm, overly speculative enthusiasm, irrational exuberance, as some people have called it over the years. Whatever term you want to call it, this is a bubble, this is a mania. Look, if you're watching this video and you're buying GameStop here at $340 tomorrow, God bless you. I mean, I hope for you that it goes to 700 and you double your money before it comes crashing down, because eventually this will come crashing down. Mark my words. We'll check back with this in a couple weeks or a month or two, and we'll see where this is. And by the way, I don't care. I mean, this is just one stock in a universe of 5,000 stocks in the US, right? I don't really care personally. I don't speculate in this kind of way. I don't buy things that have gone up 1,650% in a week. But if you have profited from that, I say congratulations. I'm also a trader. And so I say if any trader has made any profit in any asset, congratulations. Go have a beer, go hang out on the beach, go celebrate, do whatever it is that makes you happy. You should do that when you have a profit in the markets. I'm just saying, me personally, I don't chase things that are moving vertical like this. It's just not what I do. I only buy charts that are in the lows like this, waiting for something like that. That's my investment philosophy. Back to the main point. Speculative appetite. Where has it gone? It has gone into stocks like this and Reddit users that are basically trying to take on Wall Street, trying to create these short covering rallies. Now, this is the critical point. Are you as an investor going to chase a stock like GameStop that's already up over 1,600% in the last couple of weeks? Or are you going to look for the asset class that is not being chosen as a speculative vehicle at this point, which means it has the potential to do that in the future? Which will you choose? Are you going to be like the sheep, chasing the other sheep? Oh, ignore the black sheep walking the other way. He's a contrarian in the family. Have you heard that before? Have you been talking with your family members or your friends or your cousins and they think you're the contrarian? Lonely place to be sometimes, right? But that's okay. Sometimes you got to be a little bit lonely to make a profit in the markets. And this guy is saying, why is the fool going the other way, right? The black sheep. He's the only one walking the other direction. Are you going to follow the rest of the sheep and pile into the current speculative frenzy of GameStop? Or are you going to be different from the crowd and walk your own path? This is what we are trying to do here. This is what I'm trying to convince people to do, to consider, to think for themselves. When we're talking about precious metals, we're talking about investments, we're talking about life choices, we're talking about health, all these things. What are you going to choose? Bring it back to where we are in the markets. This is what we're focusing on, at least on this channel for the time being. Boom. What is not seeing the speculative investment flow at this time that stands to benefit from it in the future? It is the precious metals. Are you going to follow the crowd and pile into the latest hot stocks? Or are you going to look where we have just demonstrated that no speculative appetite exists, at least compared to the 2016 peak? And so here I want to show you exactly what I'm talking about. Remember that chart of GameStop, which was just moving sideways for years and years and years. Then all of a sudden it went, to the moon? This is what we are trying to do now. This is a company that we are investing in that you can invest with us if you sign up for the $1 trial for 2 weeks, or if even better, you stay on after that so that you receive updates about this company. Because it's not typically about only buying a company one time and then forgetting about it, but typically there are updates. For example, what if it's the proper time to sell the company? What if something goes wrong with the company? You want to know about these updates in the future, which is why I encourage you to stay on past the 2-week trial. But either way, this is the type of company that we are investing in now. And you look at where this company was at its 2011 peak when silver was $50 per ounce, and you say, okay, so silver is $25 per ounce right now, so silver needs to double to get back to its 2011 peak. This company needs to rise 900% to get to its 2011 peak. Once again, you can get the name to this company and everything else that we are doing by signing up for the trial. These are the types of investments that, if we are right, are going to change the course of your life. And so please keep that in mind, whether or not you want to chase the latest high flyer stocks or you want to consider the asset class that is not being looked at right now. And we talked about that. Let's bring up that chart here. Where is it? Boom. The junior silver miners, which is one of those stocks that I just showed, to the gold ratio. This is the speculative appetite within the precious metals sector. We're showing that it's lower now than it was even at the peak in 2016, even though the price of gold is higher than it was in 2016 and the price of silver is higher than it was in 2016. So don't follow the herd. Join us and invest independently. You get the trial to do that right now. You can find the link to that trial below. As I said, this is all spelled out in black and white. We just want to help out as many people as possible to try this. If you would like to work with me one-on-one and you don't want to do the trial or anything like that, send me a message. Give us a phone call. We're happy to work with individual investors. We work one-on-one. Myself, I sit down with you by phone or by Skype. We talk about your personal situation, and I give you a full what would I do in your scenario given your risk and your reward tolerance. To sign up for the trial, click the link below. This is a make or break time in the precious metals markets. You have seen the evidence for that. If you would like to try investing with us, the service is called Precious Metals Intelligence. You receive all of this right to your inbox. Whether you choose yes or no, I hope you will seriously consider this video and think about the risk and reward spectrum that we talked about. Physical gold all the way to the junior silver miners, right? We talked about that on a spectrum. Think about where we are right now at this moment. It's not a yes or no or right or wrong answer. It's where are we in that spectrum right now? And I would say the evidence shows us that we are nowhere near a speculative peak in the precious metals sector at this time. Think about that. I'll see you guys soon.